Welcome back to Wall Street Podcast. Today we're diving deep into a new research report from Morgan Stanley & Co., LLC. It's an insightful update on Apple Inc., titled Another C-Suite Retirement in Cupertino, published just yesterday, July 9, 2025.
And our mission here in this deep dive is really to unpack the implications of this executive shift at Apple. We're looking at what it means for, operational stability, long-term leadership, and critically, its future financial performance and stock outlook, giving you those essential nuggets, quick and thorough.
All right, let's jump right in. This is pretty significant news. Apple COO Jeff Williams, he's announced his retirement for later this year. Now, he was Chief Operating Officer, a really key role, and someone once seen as a potential successor to Tim Cook. So what's the immediate context here?
Well, it's notable because this is the second senior C-suite executive departure at Apple in just the last 8 months. Remember, CFO Luca Maestri retired earlier this year.
Right, Luca Maestri. Okay. But Morgan Stanley does note this transition is pre-planned. What does that actually mean? Does it take the sting out of it, potential disruption-wise?
Exactly. Pre-planned is the key phrase they use. Sabih has already been named the new COO successor. And crucially, Jeff Williams isn't just leaving tomorrow. He'll stay in his role overseeing specific things like design and the Apple Health initiatives until he retires later this year. So this kind of meticulous planning, plus Sabih Khan's background, he's been at Apple for 30 years, over 5 overseeing the supply chain, it really suggests minimal, maybe even zero, disruptive impact on Apple's operations, their supply chain strategy right now.
Okay, so the operational side, the making and shipping of things, seems stable. But what about the impact on Apple's, let's say, broader strategic direction? Williams was involved in design, Apple Health, big areas.
Yeah, that's where it gets interesting. Williams played a pretty key role overseeing the design teams, especially after Joni Ive left back in 2019, plus the Apple Watch, Apple Health initiatives. So, post-retirement, the plan is for CEO Tim Cook himself to temporarily oversee design. Morgan Stanley thinks a new dedicated design head will probably emerge eventually, or maybe SVP of Software Engineering Craig Federighi and SVP of Hardware Engineering John Ternus might absorb some extra design duties. It signals a very careful, but still evolving approach to these really critical product areas. It's definitely something to watch.
Okay. And whenever you have a senior C-suite departure like this, it naturally raises questions about the ultimate leadership succession, even if Tim Cook doesn't seem to be going anywhere soon. Morgan Stanley says this news shortens the list for his eventual successor. So what does this deep dive tell us about the likely candidates now?
Yeah, it's interesting because many of Apple's senior leaders are actually around the same age as the executives who are departing. For example, you've got Eddie Q heading services, John Giandrea on AML, Greg Joswiak in marketing, they're all 60, and Johnny Srouji, head of Apple Silicon, he's 62.
So that does leave a narrower field then, doesn't it?
It really does. Morgan Stanley zeroes in on 2 most likely eventual successors. Craig Federighi, who's the SVP of Software Engineering, he's 56, and John Ternus, the SVP of Hardware Engineering, who's 50.
And does the report lean towards one over the other?
It seems to, given Apple's history, promoting from within, and Ternus's hardware background. He's identified as the most likely candidate, and that actually lines up with some earlier reporting from Bloomberg about a year ago. It suggests maybe a strategic direction that continues to prioritize hardware innovation right at the very top.
Okay, let's pivot then. What does all this mean for Apple's financials, for the stock performance? Morgan Stanley is keeping an overweight rating on Apple, price target $235. So they're still bullish. What's the core investment thinking behind that?
The core thesis really points to several tailwinds. Morgan Stanley believes there's the largest base of pent-up iPhone demand ever. Think about that, because replacement cycles have gotten longer. So you combine that potential demand surge with the, let's say, slow rollout of new AI features, Apple Intelligence, and a renewed focus maybe on device form factor changes. They expect all this to accelerate iPhone growth starting in fiscal 26.
Okay, beyond the iPhone, which is huge, obviously, what other financial drivers are they highlighting?
Consistent double-digit services growth. That's key. They're projecting almost 12% for FY25, maybe 11.5% for 26. That, alongside stable gross margins and some operating leverage, is expected to drive strong earnings. The report actually projects earnings per share of $8.06 in calendar year 2026 and pushing towards $8.64 by fiscal 27. And longer term, they point to investments in AI, payments, cloud, health, home. Plus this idea there's a long runway to grow spending per user from the current, $1 a day? Lots of potential upside there.
Okay, that leads to the inevitable question. What are the best and worst case scenarios here for Apple stock? What factors could really push it one way or the other?
Right. Morgan Stanley lays out a pretty clear risk reward, the bull case.
Yeah.
That's a $284 price target. They give it about an 11.7% probability. This scenario basically needs those iPhone replacement cycles to really accelerate in FY25, maybe driven by AI features on the phones, pushing revenue growth into the mid-teens for the iPhone 17. Strong consumer demand is key there.
And the bear case.
The bear case, that's down at $153. A slightly higher probability, around 12.8%. This assumes the iPhone 17 cycle kind of fizzles, maybe weaker consumer spending, maybe tariff impacts push prices up, growth could slow down across the board, declining product revenue, services growth decelerating, margins contracting. That would lead to much milder EPS growth, maybe around $6.36 in calendar 26.
And what about specific risks, up or down?
Yeah, so upside risks to their main forecast include things like stronger iPhone builds than expected, services revenue growing faster, Apple Intelligence really taking off better than anticipated, maybe new product launches in home or health, and getting regulatory issues resolved. Downside risks, conversely, are weak consumer spending, hitting those upgrade rates, maybe slow progress on AI features actually translating to value, geopolitical stuff, and increased regulation, especially anything hitting the App Store policies or revenue.
Okay, let's shift to our deep dive insights then. These are questions really for you, the listener, to consider the strategic implications. First one, continuity versus innovation. Morgan Stanley says the succession planning is a little disruptive, but is it really? Could losing someone like Jeff Williams, who wore multiple hats in areas like health and design, pose a kind of subtle long-term risk to innovation, even with Tim Cook stepping in temporarily?
That's a great question. It really gets to the heart of the balance. The pre-planning Sabih Khan's operational strength that absolutely minimizes the immediate disruption. Core operations should be fine. However, Williams was deeply involved, especially post-Joni Ive, in design and health. That specific vision, that momentum, it could get diluted or just slow down if they don't put a new dedicated design head in place fairly quickly. For a company like Apple that relies so much on innovation, having that sustained, dedicated visionary leadership in emerging areas is just crucial. So yeah, that's the subtle long-term question mark, I think.
All right, next question. We talked about this largest base of pent-up iPhone demand ever in the slow rollout of AI features. What are the critical signs, the inflection points investors should be watching for in fiscal 25 and 26? What tells us clearly if Apple is heading towards that bull case, $284, or, struggling towards the bear case, $153?
Okay, connecting that to the bigger picture. For the bull case, you need to see concrete signs that iPhone 17 upgrades are really accelerating. That means watching not just unit sales, but a clear shift towards higher-end models. That's what gets you to that mid-teens year-over-year iPhone revenue growth. Also, you need robust, measurable adoption of Apple Intelligence features. It can't just be hype. It has to translate into tangible services growth acceleration. People using it, maybe paying for related services. For the bear case, the warning signs would be, well, continued softness in consumer spending that clearly impacts those upgrade cycles. And alongside that, any significant regulatory actions that really bite things targeting App Store revenue, maybe search engine deal stuff that directly hits their services margins. Those are the key things to track.
Makes sense. Okay, final question. Morgan Stanley points to Apple's long-term growth potential in AI, payments, cloud, health, home, and that idea of growing spend per user from just one day. How does this C-suite shift and the potential CEO succession down the line affect Apple's ability to actually execute on these long-term strategies, especially if the next CEO, maybe John Ternus, has a really strong hardware background?
Yeah, this touches on strategic execution across a really diverse portfolio. Look, a hardware-focused CEO like John Ternus could absolutely invigorate device innovation that's still the bedrock of Apple's ecosystem, right? But realizing the full potential of services, health, AI, that stuff also demands deep expertise in software and platforms and business development. It's different skill sets. So the critical challenge for any incoming CEO, honestly, regardless of their main background, will be maintaining that famous Apple cross-functional synergy. They need to keep fostering dedicated leadership and investment across all these different future growth areas, making sure none of them lose momentum just because the top person has a specific leaning. It's about balance.
And that's our deep dive into Morgan Stanley's latest report on Apple, the executive shifts, and what it might mean for the future. We hope this analysis gave you a concise but thorough understanding of the key takeaways.
Absolutely. Remember, staying informed isn't just about knowing the facts. It's about understanding the implications. So thinking about Apple's long-term path, what stands out most to you from our discussion today?
Thank you for joining us on this deep dive.